Before you start on a financial statements question, okay, you have to classify the element, okay? So, same thing, sales revenue, I do not classify it, okay? For motor vehicle, okay, you classify it as NCA. Capital, you classify as OE, okay, inventory, CA, and so on, okay? So I'm just going to key in the elements, just check whether the elements are correct. Okay, I think the only confusion here might be this one. Okay, for cash at bank credit balance, this is known as your bank overdraft, and that's why I label it as CL. Okay, now before you do the adjustments, okay, what I like to do is to convert the cash at bank into either a positive or negative. Okay, because we want to adjust, so we don't want to deal with the debit and credit. Okay, so what I will do is I will cancel away this credit sign. Okay, you can do what I do in green color, and I will put in a negative 650. So I know that I'm starting my cash at bank from a negative 650 balance. Everyone clear? Because it's 650 credit. Okay? Now, after you label everything, it is down to the adjustments. So I will be doing the adjustments along with you. Okay, for number one, business issued a credit note to one of its credit customers of 500. The goods cost 100. Now, what is going on here? When the business issue a credit note to a credit customer, okay, this is what we call a sales return. We are deducting what they owe us. Okay, so if you issue a credit note, you should go to your trade receivables and deduct 500. Okay, so you can do all this in your fractions. Okay, deduct 500, and your sales return will plus 500. Okay, this is not all, because you have your cost, the goods cost 100, and that's why you will go to your cost of sales. Okay, and you minus 100. Let me pause here. Why cost of sales minus 100? Because when you issue a credit note, okay, when you issue a credit note means that there's a sales return. Now, you will only record cost of sales when you sell, right? It's the account name by itself is cost of sales. So it is the cost of what it took you to sell certain things. Now, when you have a credit note, it means that the goods are returning back to you. When the goods return back to you, did you sell it at all? No, you did not sell at all. That's why your cost of sales will be deducted 100. It is as if you didn't make that sales at all. Okay? So when you return, when the person return you things, you'll go to your inventory and you plus back the 100. Okay, why plus 100? Because the goods return back to you. It is now back into your storage. Okay, that is for information 1. Okay, number 2. The owner withdraw goods 6700 for personal use. Okay, so withdraw goods, so I minus 6700 from inventory. And I will go to my drawings and plus 6700. This is the second adjustment. The thing that the owner draw will deduct 6700. Okay, so I'm drawing goods, so my goods will minus 6700. But my drawings account has increased. This is to record that the owner drew more things during the year. The drawings has increased. Okay. Okay, for number 3. Okay, number 3 is a business issued a receipt amounting to 14,300. The cost of goods was 3,750. Now this is what we call a cash sales. How do I know it's a cash sales? Because I issue a receipt. Now if you issue a receipt, there can only be one account, and the account is cash in hand. Okay. Now this is the part where a lot of people are confused. Oh, how come it cannot be cash at bank? Okay, when you issue a receipt, this is when the business has received cash, the dollar notes, the coins, okay, the cash itself. Then we will issue a receipt. Okay, So receipt is for cash in hand. Okay, now because you made the sales, you go to your sales revenue and plus 14,300 as well. Okay, so these are the first two entries. The cost of goods was 3750. So you'll go to your cost of sales and plus 3750. And your inventory will minus 3750. Why cost of sales increase? Because you sold more things, then your cost of the sales will increase, right? Because cost of sales is the cost of your sales. If your sales increase, your cost of sales will increase. Just take note of the numbers. Okay, cost of sales and inventory is 3750, but your cash in hand and your sales revenue is 14,300. Okay, and then this one. Okay, 2,000 was received in check. Now 2,000 was received in check. I will go to my cash at bank and I will plus 2,000. Okay, we will do this one first. This is in full settlement of a debt of 3,000. Okay, now if you receive in check, you are receiving from your customer. Okay, your customer's account is called trade receivables, right? There's only one group of people that will give you checks, and that is your customer. And what is the account for customers? Trade receivable. So you go to your trade receivable, and because this is a full settlement, you will go to your trade receivable and minus 3,000. And you have a problem. What is the problem? The problem is your cash at bank increases by 2,000, but your trade receivable minus 3,000. The value is not the same. So how do we account for the difference? This is a case of discount allowed. Why? How do I know it's discount allowed and not discount received? Okay, because we are dealing with customers. When we are dealing with customers, only we can allow a discount to our customers. We do not receive discount from customers. Okay? Okay, and the last one. Owner paid 4,000 to settle the amount owed by the business to credit supplier. Now, what is going on? Owner is paying 4,000. This one you have to take note. This is not the business paying 4,000. This is the owner paying 4,000. So you have to understand it as if the owner is giving more money to the business for the business to use the money to pay back. Okay, so this is actually an owner's contribution. This is additional capital. Okay, first of all, there's something strange. Why? Because I write the owner pay, not the business pay. When the business pay, I will use business. But when the owner pay, there's something wrong. Okay, this is what we call an owner's contribution. Okay, so your capital will increase by 4,000. And because you settle the amount owed by the business to credit supplier, this means trade payable minus 4,000. And these are your adjustments. Now, I want you to take note of this one. Additional capital. Okay, this one is something that I have not taught yet, but I'm going to add this one in today. Okay, what are the repercussions of this? Later on, I'll let you know. Okay, but you are not deducted marks based on this quiz. Okay, if you have not written this one, it will not affect your marks. But in the future, you will. Okay, I'm going to add this one in today. Okay, Patrick.